We're going to look at the long-term and the short-term, the most recent trends. We're going to look at both of those. Shows us what the big money is thinking. So what we know that what moves a stock, you and I don't move a stock. Okay, what moves a stock are the pension funds, hedge funds, investment banks, insurance companies, mutual funds. That's what moves the big money because they're trading billions, with a B, billions of dollars. What is nice is if I can see that the insurance company or the big mutual funds or the big institutions are coming into a stock, I know because they're so big, it's going to take them at least 3 months to get there, and they're going to push that stock up. Then they're going to stay in that stock for a while before they take their profit. Well, if I can see that, and that's where technical analysis comes in, I can get in the day after. And guess what? I can ride with them. And then when they start to sell, I can get out and lock in a profit. So I like technical analysis because it is how I make money. And you're going to want to learn as much as you can about how to read a chart because that's where your money is made, in that education. Bullish entries, 3 green arrows, right? Bearish entries, and you're going to learn that, 3 red arrows. It's a logical approach combined with art. Now, a lot of people think that technical analysis can simply be automated, and it can't. It can't because fundamentals can. Remember, fundamentals are automated. They're all numbers. What is the PE ratio? Price divided by earnings. They're all numbers. But technical analysis, there's an art to it. So, for example, right here, this is an uptrend, right? This is an uptrend. Okay, so my stock is here, and there's an uptrend. It's now here. Okay, well, now it's here. Is that an uptrend? Well, yeah, it's still above. Is that an uptrend? Well, yeah, kind of. What about there? Well, and that's where the art comes in. So technical analysis, learning to read a chart isn't something you're going to learn overnight. It's a skill that's developed over time. So you're going to want to take as many classes as you can and learn as much as you can because it is really going to give you the biggest return on your investment, and it makes you more comfortable. It makes you feel more safe, right? You can read a chart and you can anticipate what the stock's going to do. It just overall makes you far more comfortable. So it is art. Now, advanced technical courses, we have courses, take courses with us or take them anywhere, but do take the courses from someone who does this for a living. I don't care where you take your courses, but make sure you're learning from people who actually do this, right? So you want to feel good about it. All right, so we have trends. Now, there can only be 3 trends, okay? Uptrend, sideways trend, and downtrend. So what's nice about that is no matter what, you have a 33% chance of getting it right when you're identifying the trend because there's only 3 of them. So there's an old saying, and it's in the industry, and it is simply this. The trend is your friend to the end. And I am not with you, but I want you to say that out loud at home with me right now because it is the most important thing when it comes to investing. So ready? The trend is your friend to the end. And let me tell you, it is the most important thing when it comes to buying a stock because if you buy a great quality stock with a great PE ratio and lots of money in the bank and really good fundamentals, but your stock is in a downtrend, it doesn't matter how good the company is, you're going to lose money. It's so important. So when we first look at a stock, we have 3 trends. We have a bullish trend, and when a stock is in a bullish trend, we're going to want to buy and invest with strategies. Now, this is part of your education. What strategy am I going to use? Invest in the strategy that makes money when the stock goes up. Then there is a sideways trend. And when a stock is going sideways, you are going to, and there are many strategies and many ways you can make money in a sideways stock. I love a sideways trending. It's the most predictable. I love it. It's one of my favorites. All right. It is now, I make most of my money at the highest rates of return are when a stock is actually downtrending. It's totally counterintuitive to everything you've ever learned. But sideways are great. As a matter of fact, Stacy's going to do a cash spread for you tomorrow that makes a great return on a sideways trending stock. And come to think of it, even your covered calls that you're learning in this course, covered calls, you can make money in a covered call with a sideways trending stock because somebody pays you money, you get the money right away if the stock goes up. Well, if it doesn't go up and it's just going sideways, you still get that money. So sideways trending stocks are still a great way. Covered calls are still a great strategy in a sideways trending stock. And then, of course, there is a downtrending stock, bearish. And as I said, it is when you can make the most money, but there are several strategies with very little risk. And Stacey is going to go into some of them tomorrow with how you can make money in a downtrending stock. And believe it or not, you can make a lot of money when the stock goes down. But the first thing we do when we look at a chart is we say, what trend is the stock in? What trend? So when we look at a chart, we are reading the chart from left to right. So this is the oldest piece of information, and this is the most recent. Now, I don't care if this is a one-day chart, right? That would be early in the morning, and that would be in the afternoon. If this is a one-week chart, if this is a one-month chart, it doesn't matter. We always read our charts from left to right. So now when we look at this chart, what trend would you say the stock is in? Well, if you don't know, you just take a line, and you say, well, it started here, and it ended here, so it is in a uptrend, all right? So we've got an uptrend. So within this chart, we can see this blue line. Now this blue line is my moving average. So your moving average is the average close price of a stock for the last 30 days, okay? So the average close price, so it basically every day the stock closes, it just plots a line, plots a line, plots a line, and that is your average close price. Now, short-term traders will often use a 20-day moving average, and long-term stockholders will often use a 200-day. But on our chart, it automatically defaults to a 6-month time frame with a 30-day moving average, all right? So we've got our 30-day moving average. Now, the arrows, because we have 3 green arrows, 3 red arrows, the arrows actually trigger whenever the stock closes above or below the moving average. Above or below, the arrows will trigger. So this is my uptrending stock, and we've got the moving average. Now the moving average will often act as a support or resistance, right? And as I said, the arrows are triggered with the moving average. Now, when I say the moving average acts as support, what I mean is when the stock comes down, it'll bounce off that moving average. So it's supporting it. Now, it can also act as resistance. So if the stock is underneath it, it can hit its head on it. So the stock, when we're looking at a stock chart, we're essentially looking at all of these things. Now, if we go back onto the website and we'll look at Intel right here. So looking at Intel. Now, when I look at Intel, and I look at the chart, so I want to spend a little time helping you understand the art part of identifying the trend, okay? So I'm looking at this stock. So the stock started here, and then it ended here. So what kind of trend is this? In an uptrend, right? Now, that's what it's done overall. Now, if we look at the most recent trend, in order to determine, so that's my stock, that's my trend, right? That's my nice uptrend. There it is. So now what I want to do is say, what's the current trend? So I have my overall trend, and then I have my current trend, meaning what has it been doing the last little bit? What's it been doing? So in order to do that, I'm going to look at these lines here. Now, these lines are support and resistance. Now, these are automated on our website, and we are the only website that actually has these automated. So the support and resistance lines, show you these here. So our support and resistance lines. Now, when I say support and resistance, what am I talking about? Right now, I'm standing on a stage. This stage is supporting me. Okay, I'm standing on the stage, it's supporting me. Now, if I jump off the stage, I'm going to land on the floor. So my support is I'm standing on my stage, it's supporting me. If I jump off, I'm going to land on the floor, right? I'm going to land on the floor because it's there. So let's pretend that we get one of those workout trampolines in here. Okay, so we get a workout trampoline, it's right here. And I'm standing on the trampoline and I'm bouncing on the trampoline. That trampoline is supporting me and I keep landing on it and landing on it. But the ceiling, how high can I go? No matter how hard I jump, how high can I go? I can only go to the ceiling. So the ceiling and the trampoline is my range. That's called a trading range. A stock will trade within its range. It's going to trade between support and resistance. That's what it's called. It's called a trading range, support and resistance. So you will see that whenever a stock is going up, 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 and then it changes direction and it pulls back. So right here is my ceiling, right? And now that it's pulled back, that has become my ceiling and it's going to come down to the floor. Now, whenever the stock changes direction, the wet side will automatically, a line will appear. So you'll automatically get a green line. And then when a stock lands on the floor and starts to go up, a red line will appear. So that will be its support or floor, and the green line is its ceiling. So a stock trades within a trading range. It's going to trade within that trading range. For us to determine the current trend, so the overall trend, 6 months, that's easy. The current trend, we need to, this is the art part, okay? We need to start being able to identify support and resistance. So what we're going to look for is we're going to look at the last little bit. Now for an uptrend, what we want to see, you guys, is higher highs and higher lows. So we want to see those red lines going up and the green lines going up, higher highs and higher lows. In a downtrend, we'll see lower highs, lower green lines, and lower lows, lower red lines. So we're going to do this quite a bit so you can get familiar with it, because I want you to get more comfortable with reading a chart. That's where your money's made. You can never learn too much on how to read a chart. And it's a skill that's developed. It's not something that's learned overnight. You get better and better at it as time goes on. But support and resistance, just so you can kind of see this here, we've got, so my red line is support, right? And you've got support here, and then you can see here is resistance. And when a stock breaks through a floor or ceiling, the old support will become the new resistance. So the old floor will become the new ceiling. The old ceiling will become the new floor. Now I'm going to go into that and show it to you, so don't worry if you're not quite understanding it right now. But we can see here we have a trading range. There's our trading range. There's my floor. There's my ceiling. So we can just see that, you know, this is support and resistance and how it goes. But I want to, before we get into the other indicators, I want us to spend some time really looking at this so you can kind of get more comfortable with it. And we'll look at chart after chart. I just want you to get this down. Okay, so overall trend is up. Now, what's my current trend? Well, I've got a low, a lower low, a higher low. I've got a high, a higher high, and a higher high. See my green lines? High, higher high, and a higher high. So my overall trend is up, but my current trend, well, let's look. We've got a high, a higher high, a higher high, a low, a lower low, but then a higher low. So my current trend is kind of sideways, right? It's kind of mixed. That's what it's doing. So current trend sideways. Now let's look at another stock. Let's see here. Let's look at Starbucks. We'll look at Starbucks. See what that trend is doing. So with Starbucks, here we go. I've got, so what is Starbucks' overall trend? Overall trend, up. Current trend, we have a high, a higher high, a lower high, a higher high, right? We have a low, a higher low, a higher low, a lower low, a lower low, a higher low. So kind of mixed, right? And here's a nice trick. if you're not getting consecutive higher highs and higher lows, it's sideways, right? You're going to be right 30% of the time, but you can see its range is kind of sideways. All right, so that's Starbucks. Now, let's look at another one. We'll look at Tesla. What is Tesla doing? Okay, what's Tesla? This is a good example. What's Tesla's overall trend? Overall trend started here, ended here. Overall trend is up, right? My overall trend is up. What's my current trend? My current trend right now is I've got a high, a lower high, a low, a lower low. My current trend is, but then I've got, a high, a higher high, a higher high, a higher high, a lower high, a low, a higher low, a lower low. Once again, we're sideways. So my current trend is, let's see here, is that better? Current trend is sideways slightly down, right? So we're kind of going down. So we've got high, a higher high. Well, it's kind of the same, right? High. And then a low and a lower low. So it's mixed slightly down. We also see the moving average is headed down too as well. So we're kind of down. So overall trend up. Do you see that? My overall trend up. But what is my current trend? It's slightly down. All right, so let's look at yet another. Let's look at Visa. See what that one looks like. Okay, so what's going on here? You bought it here, you put your hard money in here, and what did it do? It went down, and then it went up, and then it went down a little, and then it went up, and then it went down, and then it went up. So overall sideways, and this is where it gets, this is why you're going to love this education, because if you had your money in this stock, let me ask you, it's sideways. How much money did you make? It's been 6 months. How much money have you made in 6 months? Nothing. You've made nothing in 6 months. Nothing. It's gone sideways. So overall trend, sideways. Current trend, we've got a high, a lower high, a lower high, a higher high, a lower high, lower low, lower low, lower low, higher low. It's sideways. It's just current trend is sideways. Overall trend sideways, current trend sideways. So let's look at, I just want to kind of show you, I want you to get more comfortable with how to read these. So let's look at this stock here. This is SHOP. And I want to now explain support and resistance a little more so you have a better understanding of it. All right, so here we are. We've got, what is the overall trend of this stock? What's our overall trend? Well, it started here and it ended here. It's slightly up, not much. But do you see how the stock has been trading in its range? Do you see that? It goes from the ceiling to the floor, to the ceiling to the floor, to the ceiling to the floor. It's just floor, ceiling, floor, ceiling, floor, ceiling, right? So when a stock does this, and if we look here, so we've got the stock, and right here, the stock will bounce off the floor. So what does the stock do? Bounces off the floor, goes to the ceiling, comes back to the floor, goes to the ceiling. Now I want to show you right here what happened, okay? Right here, what do we see that happened? The stock was trading between this floor and the ceiling. Now here it broke through the ceiling. Do you see that? It broke through. Now when a stock breaks through the ceiling, and then it made another ceiling, and then it came back down to the floor, right? And then what did it do the next day? So it hit the ceiling, it came down, hit the floor. There's my floor. Then the next day, what did it do? Well, the next day, it broke through the floor. Now, what happens when a stock breaks through the floor? Okay, now this is important, okay? So if I am bouncing on my trampoline, the highest that I can go is my ceiling, right? That's the highest I can go. And the lowest that I'm going to hit is my floor. But if I break through the floor, I miss the trampoline, I break through the floor, where am I going to go? To the ER. No, where I'm going to go is I'm going to go to the floor beneath, okay? If I break through this floor, then I'm going to go to the floor beneath. Think of a hotel room. If I break through the floor, now I'm in the floor beneath. And guess what? My old floor, when I look up, my old floor, and there's a hole right next to it, is my new ceiling. So with support and resistance, and write this down, this is very important. It'll start to make more sense as you remember, technical analysis is a skill that's learned. It's an art. So write this down, write down, old floors become new ceilings. Old support becomes new resistance. And old ceilings become new floors. Old resistance becomes new support. So if you look here, look at this. This stock, was kind of, it broke through and it made a new ceiling. Then it came down and broke through that. It came to its floor, and then the next day it broke through the floor. Well, once I break through the floor, once I went below, all of a sudden when I look up, that old floor is my new ceiling. And you can see that this was support. It became a ceiling, right? So now it's the ceiling. And here, so then we've got a new floor, and it's trading, and then it hits the ceiling and comes down. And as we follow this, we can see the stock just trades between the floor and the ceiling. But here's what's nice. Once a stock breaks through a ceiling or a floor, that ceiling or floor will, so for example, if you look right here, this was a ceiling. Here it is. Right here is the ceiling. Do you see that? Then it broke through the ceiling. There's a new resistance. And then what happened in this area? This area became the new support. Do you see that? So here it was a ceiling. Now it's a floor. So my old ceiling becomes my new floor. So old support becomes new resistance. And this is really important for us as we try to decide, when do I want to enter a trade? Where is the stock going to go? So if I look at this stock, right, and I just say, hey, right here, this stock has only gone to this level right here. Right? 1,500 was its ceiling. That's where it's gone. So once it hit here, it came back down. But if this stock starts to go up, I know that stocks trade between their floor and their ceiling, between their floor and their ceiling. That's what they do. So now, do you guys have a stock that we want to look at? And we'll look at the floors and ceilings on some of your stocks. Any symbols? Okay, so go ahead and give me, if you guys want to look at some of your symbols, go ahead and tell me some. In the meantime, we will look at, let's see how Boeing's been doing. They've been having a hard time. That was my dad's first job here, so I have an affinity to Boeing. It's a big, in Washington State, it's a big employer for a lot of people. But if we look at Boeing, we can see that the overall trend is up. Do we see that? Overall trend up. And now, what do you guys think the current trend is? Go ahead and type it in. We've got a high, a lower high, a higher high. We've got a low, a lower low, a higher low. Now, the market has pulled back quite a bit this last week. So we've seen it come down a little bit. And it was going up really high, and now it's coming down. So we're getting a lot of that. But what do you guys think that this trend is? What's my current trend? Overall trend here to here, overall trend up. What is the current trend? High, higher high, low, lower low, lower low, higher low. So current trend is sideways, right? Sideways. So we're just seeing now, if you were to buy the stock, we can see that it's got, so what's nice is we can look at this stock, and right now we've got this new level. Now I want you to notice here that this became kind of a level of support, which became resistance. So you'll start to see that stocks go from support to resistance, and they trade within that. All right, have we gotten a symbol?
Yeah, it's on Microsoft. Or healthcare centers, or healthcare, HCA.
Okay, we'll do Microsoft, and then we'll do HCA. So Microsoft, all right, so I want you guys to tell me, everyone type in, What is the overall trend? So go ahead and type that in, because this is really an important part, learning to read these charts. So what's my trend? My stock was here, and now it's here. So what do you guys call that trend? What do you think? Sideways. I say sideways, right? Stock is sideways. And then what is my current trend? High, higher high, higher high, low, higher low, but it's really still sideways. So we're still kind of going sideways here. We do have a couple of higher highs and we do have a couple of higher lows, but if you look overall, the stock has pulled back quite a bit. We're still sideways. And then what did you say the next one was, Mike?
HCA.
HCA. HCA. Okay. HCA. Oh, that's HVA. There we go. HCA. Okay. Now let's look at this one. Okay. Go ahead and type in what's my overall trend and type in what's the current trend. Current trend. Overall trend, current trend. So overall trend is up. This is a good one. Overall trend is up. Now, this gets to be the tricky part, right? This is our education. What is the current trend? What do you guys think? Current trend. We have a high, a lower high, a higher high, a lower high, a low, a higher low, a lower low. So my current trend is sideways. Lots of sideways going on. Current trend is sideways. We've had a good pullback. So what does this tell us? The reason we want to look at the current trend is we want to know the timing to get in. You can get into a stock, but understand that all stocks trade between support and resistance, between their trading range support and resistance. So can a stock move down when it's in an uptrend? Can a stock pull back in an uptrend? And the answer is yes, it can. So when it's in an overall uptrend, a stock will still breathe a little bit. So think of it like this. Think of somebody running up a hill. They're running up a hill, running up a hill, running up a hill, and then they start to walk a little bit. So they're catching their breath, catching their breath. Now, if they're doing that, I have one. If they're doing that, a stock will still, when it's in an uptrend, it will pull back a little. It can come back a little within the uptrend. So we can have a stock in an uptrend that pulls back a little. Now, when we're looking at when to buy a stock, and that's where this gets kind of important, is we want to buy a stock when it's bouncing off the floor, because if it's hitting the ceiling, right, and it's going to come back a little bit, we can buy it. But if we wait just a day or two, 3 days, we can buy it at a better price. So, for example, here the stock was going up, it hit its head, and then it pulled back, right? So now it's in a sideways pattern, overall in an uptrend. So if we look at this overall uptrend, and we see, okay, the stock has been in an uptrend from here to here. So here's a great example. We see the stock on the floor, hits the ceiling, right, bounces at the ceiling, and then pulls back. When we see it going sideways and start to pull back, instead of buying at the ceiling, I can just wait 1, 2, 3, 4, 5 days, wait till it hits support, buy at that price as it goes up again. So buying and learning to buy between support and resistance and recognizing support and resistance becomes so important, because ultimately, if you can save, $2 just because you were able to recognize support and resistance. So now you bought your stock at, $2 less. Well, think of that on 1,000 shares. You just saved $2,000 just because you understood how to read support and resistance. So that's where the education comes in. And that's why I say, take as many classes as you can, learn as much as you can about how to read a chart. You can never learn too much on how to read a chart. You can just never learn. So you're going to want to learn as much as that. So overall, this stock is in an uptrend, but if you had to jump in, you'd want to jump in, not here where, let's see what that price is. So here we could have ended up maybe buying, here, let me make that here. So stock is here. So it goes up, it hits here, and that price would have been around 140, or you could have waited for it to come down and hit here, and now you're getting in at 135. That just saved you $5. What's $5 on 1,000 shares? That's $5,000 you saved because you knew how to read a chart, because you knew how to recognize support and resistance. So we are the only website that actually has these automated. And that's why I say, you know, it's literally like, it's like trying to drive blindfolded when you don't know how to read a chart. You're just ultimately guessing, right? You really want to be able to see, oh, there's a cone in front of me. Oh, there's a pothole. Let me go around that. Oh, so that's where technical analysis comes in, and recognizing support and resistance. So here it just broke through this ceiling and it broke through this ceiling. So we've got right here, it's just now broken through two areas of resistance, right? So it's just, so if we look here, it broke through this ceiling and this ceiling, so it's closed above. So now we can look back and let's see if, let me just go a little bit bigger here and see if I can see. No, it looks like pretty high. So now we are going to wait until it creates a new floor. So it just broke through the ceiling, and we're going to wait. So it's sideways slightly up, but it just broke through a level of resistance. So it's a good stock. So support and resistance, and that's what we're looking at. Where's my floor? Where's my ceiling? Where's my floor? Where's my ceiling? If I can learn, and when a stock, so here we go, so when a stock breaks through the floor, if I break through the floor, or my old floor becomes my new ceiling when I break through. So you'll notice that stocks will trade in a range and old support will become new resistance. All right, let's look at one more. Do we have another one?
Intel, INGC.
Okay, so if we look at Intel. All right, go ahead and type in what you guys see, overall and current trend. So we have, if we look here, overall trend up, current trend sideways. Do you see how nice this stock is trading within its range? Are you guys really seeing how it can trade within its range? And now, for example, let's say, and why is that important? It's important because it also tells us what investors are doing. If I see this stock and the stock hit here, and now that's at maybe about $63, right? And then the stock fell down to support, and then it starts to go up. Now what's going to happen when this stock hits this range? You're going to have a lot of institutions that say, hey, I got in at 54. The last time the stock went into this area, 63, 64, it came down. That's a ceiling. It's never broken that area. So that's my ceiling. That's the range. So, right here, the stock went up. It kind of broke through, and you can see here there was some obviously good news or an earnings report because the stock jumped up. But here you've got a ceiling that has been consistent. So this is the ceiling. So hopefully everyone's recognizing this area. So if I've bought the stock here and it's gone up, then I might think, hey, when it gets to this area, guess what? It's never gone past. Let me sell and get my profits. Now, the stock has pulled back a little, but it does look like it might be going back up. But overall trend is up. Current trend is sideways. So what will happen is when stocks hit the ceiling, you'll have, investors, people look and say, hey, the stock has hit the ceiling. And if I get a sell signal, and as we get into this, I'm going to tell you some candlesticks, it's like having a secret sign language. Certain candlesticks, and we're going to get into candlesticks right after lunch. I'm going to show you how to read these exactly and what they mean and why we use candlesticks versus line charts or area charts or high-low charts. Because candlesticks give us information that allows us to anticipate what sellers and buyers are doing and what to do next with the stock. So we've got overall trend up, current trend up. Now, we do have some other indicators, and I want to kind of talk about these. So my Koval indicator and my MACD are oscillators, All right, so they're oscillators. So what they do, they're very short term, and they tell us what the stock is going to do in the next few days. It's not long term, it's just in the next few days. So I kind of want to walk through how to read this. Now, the COBOL indicator is a proprietary indicator to this toolbox, and it's special calculations that only Mike knows. He won't tell Stacy, he won't tell me, but it is the fastest indicator on the entire chart. So on your price chart, COBOL indicator typically turns fastest first. You'll see the arrows first there. So they let us know what's going to happen. And then the MACD is just an additional oscillator, different. It has a different formula, but it's just also an additional oscillator for us, an additional indicator. So when I look at the COBOL indicator, I have, let me show you how to read this. We've got this upper area here. So from here to here, we have this upper area, and this is the high of this chart here. And then this down here would be the lower part of the chart. Now, whenever the stock, these two lines cross, when they cross, you're going to get an arrow. So here you can see they crossed and we're curving down. We've got a red arrow, and then they crossed here and went up. They're crossing as they go up. That's my green arrow. And then they're crossing here, heading down. Now here, they're at the upper part of the chart. So if I just look at this and I say, okay, this has crossed at the upper part of the chart. So we can see we're in the upper zone, right? In the COBOL indicator, we're in my upper zone, and I've got an arrow, and it crossed, the lines crossed. I've got a red arrow in the upper part of the zone. I can look at where it crossed in the upper part of the zone here, and it crossed here, and I can scroll up and look at the chart, and I can know that the chart would have come back for, a few days. Now, I don't know if it's going to be 4 days, 5 days. It's short term. I don't know how many days. I just know it's going to pull back. So when we look here, we can see the stock went from here all the way down to here, right? Came all the way down. So there's my arrow, and there it came down. And you can see that this arrow triggered before the arrow on the price chart. So COBOL indicator, secret formula only found on this website, is the fastest indicator. So here we can see, there it is. We had the lines cross in the upper region, and then the stock came down. And so that is our COBOL indicator. So when it's down here, when it's in the lower region, so right here you can see it's in the lower. So if it is above this line is the upper region, below this line is the lower part of the chart. So whenever the lines cross in the lower part of the chart going up, we know the stock's about to go up. When the lines cross in the upper part of the chart, crossing, heading down, arrows triggered, the stock's about to pull back. So we can have a pullback or a bounce, a pullback or a bounce. So here we can see that the stocks, the lines crossed in the lower part, and what did the stock do? The stock went from here all the way up to here. So there it rallied. So we can see a rally or a pullback. So that is, so that's the COBOL indicator, and then you have your MACD as well. And with the MACD, once again, you have the upper and lower regions. And this was a formula by Gerald Appel. He won a Nobel Prize for this formula. It's a long formula. It's called moving average convergence divergence. And it is a couple of moving averages working together. But we also, once again, have an upper and lower region. And when the lines cross, it'll trigger the arrow. Lines cross, triggers the arrow, right? So by lines cross, triggered the arrow. Lines crossed here, triggered the arrow. But you'll notice, of these arrows, the COBOL indicator is first, then we have the MACD. So the COBOL indicator is always first, and then the price chart's going to be right up in here. But now, when we look at our price chart arrow, and I'm going to actually take off support and resistance for a moment. What triggers the arrow? Do you guys remember? What triggers an arrow on the price chart. What does the stock have to do? What does the stock have to do for me to get a green arrow? Do you guys remember? What makes the arrow come on the green chart? Go ahead and type it in. I know you guys are at home. I'm sure it's easy to tune me out. I hope the TV's off. I hope you've got your phone set aside, because this information can change your life. And you know, it can be a kind of a lot to learn. It's like, oh my God, these technical analysis, but it gets really fun when you can look at a chart and you can start to understand, oh, it's going to do this because I see this, and recognize it. It is life-changing, really is. So what, do you guys remember? What is it that makes the arrow on the first part of this, the price chart? What makes the arrow? What does the stock have to do? It has to close above the blue line. Whenever the stock closes above the blue line, you can see it right here, close above the blue line, we get a green arrow. When the stock closes below the red line or the blue line, we get a red arrow. Now, can the stock touch it? If the stock touches it, is an arrow triggered? No. Nope. The stock has to close below for a red arrow and close above for a green arrow. Now, once again, the moving average will often act as support and resistance, like those automated lines that come in. So the moving average can act as that ceiling and that floor quite a bit. It can do that. So when the stock closes above and below, that's where we get it. So we have our arrows here. And the stock will stay a green arrow. We won't get, so here the stock closed above the blue line and we got a green arrow. And it stayed green. So the stock, so here's what's great about this website. We got 3 green arrows. Now just look at this for Intel. We got 3 green arrows at $49, $49.50. We got 3 green arrows. We did not get a sell signal until the stock was at $60. So it went up $10. We got 3 green arrows, boom, buy, and 2.5 months later is when we get a sell signal. And that comes 2.5 months later. So that is how, so on this website for technical analysis, we have our arrows. And our arrows, we like to buy with 3 green arrows, and we like to sell on the red arrows. That's what we like to do. Buy on 3 green arrows, sell on 3 red arrows. So we have our support and resistance. So when I first look at a chart, let me tell you the order, just so we know. First thing I do is I say, what trend is the stock in? Overall trend, what trend? Then I'm going to say, what's my current trend? In order to find my current trend, I have to look at support and resistance, which is the trading range. This is the only website in all of the world that has that automated for you. Whenever a stock changes direction, that's where we determine our support and resistance, our trading range, right? So number 1, what's the overall trend? Number 2, where's support and resistance? Then I'm going to look at my other indicators as well, right? So then I want to say, okay, what's my cobalt? Because there is nothing hapstance on this toolbox. Everything is in order of importance. The most important thing I look at when I'm looking at a stock is I am looking at the overall, I'm looking at my 6-month chart, and I want to look at the trend. And so in order of importance, 6-month chart, cobalt indicator, MACD, and then volume. Now, if I scroll above this chart, and we have not talked about this yet, I actually have a 5-day chart. So this is 5 days. Now, this is a little more advanced. This is super important when you're trading options. You're really going to really appreciate and want to do this chart. But what this chart does is it tells me what's the stock been doing over the last 5 days. And right here, that's 1 day, right? So 1 day, 2 days, 3 days, 4. So we just have our 5 days, right? So that is how we can tell our 5-day chart what it's doing. And it is a little more advanced. It definitely is used for options, but it's an important chart. It's an important feature. and you can, change that to 1 month or 3 months, and we'll look at this more when we're looking at how to read charts. We'll look at it a little bit more there. But that's my 5-day chart. But right now, for what we're doing for covered calls, for where we're at, we're looking at a 6-month chart. We're looking at covered calls, and we're going to look at our overall trend, our current trend, support and resistance, and then we're going to look at volume. So let's talk about volume for just a second. So when we look at the volume of a stock, if you look down here at the very bottom of the page, we have volume. Now, who moves the stocks? Do I move a stock? Do you move the stock? Who moves the stocks? Do you know? Do you remember? The institutions. So this is what is so nice about this is, do you see this blue line here? This tells us the average volume of a stock. Now, do you see these big spikes? These spikes, when we see big spikes, that tells us that the institutions, that's not us, the 5%, that's the institutions. That tells us the institutions are either buying or selling that stock. If we see a big spike, and the stock goes up, we know the institutions are buying. And guess what we can do? How long does it take institutions to buy? Do you remember? 1 month? No. 2 months? No. At least 3 months. Why? Because they're trading billions, and they can't just buy 300 million shares in a day if a stock's only trading 1 million shares a day. They can't do it. They have to slowly get in. Well, the minute that we see that they're coming in, we can follow them. We can get right in as well. So that's where, so right here, when we see nice big volume spikes, and it's 50% higher than average, and the blue line tells us average, we know the institutions are buying, and that is a signal for us, right? And you can see this gigantic volume spike. If we follow it all the way up, look at that. That stock just skyrocketed. And we'll look at what each of these candlesticks means for us. What does it mean? The open, the close, the high, the low. So I'm going to explain all of that to you. Technical analysis is a little long, but it really tells us when we want to. The importance of technical analysis is its timing. And it is literally the difference. Learning how to read a chart is literally the difference of making and losing money. That's how important it is, because you can buy a great stock at the wrong time. And technical analysis is what saves us from that, right? That's our rescue. That's why it becomes so important. That's why it's all I ever wanted to learn, because it can help you make money very quickly when you understand it. So here's what we've got. We've got our price chart, right? And our price chart gives us our trading range, support and resistance, right? So I've just clicked those back on. So we can see our trading range. So right now our stock's trading range is right in here. It's going from the floor to the ceiling. It's pulling back down a little bit. This is my trading range. Now, here it was trading. Now here you can see this was a ceiling here. Notice the ceiling, and this ceiling became support. Do you see how the ceiling became support? It's an area there. So my ceiling here, when it broke through the ceiling, right here it broke through, now that ceiling has become my floor. So that is where the education makes such a difference in understanding where support and resistance. How can I anticipate? Do you remember how earlier I said technical analysis helps me plan and prepare? What strategy am I going to do? Am I going to do, a condor? Am I going to do a cash spread? Am I going to do a straddle? Am I going to do a strangle? What strategy, depending on where and how the stock is moving? So technical analysis is that second pillar for your education, right? First, you have to learn how to trade. We're learning covered calls. Everything you need for covered calls is right here over these 2 days. But there's other trades, right? Cash spread, strangles, straddles, all these different things. So when you look at a chart, you say, what strategy, my education, makes the most sense for what this stock is doing right now that will give me the highest return with the least amount of risk with where this stock is trading and how it's trading at this time. So that's that. And then technical analysis is how we determine that. And that's why technical analysis is so important. Now, this is just a part of technical analysis. We are going to stop here And we're going to, when we get back, I'm gonna actually do one of my favorite things, which I'm gonna teach you something that's actually taught out of our technical analysis class, but it's something that's very simple that you can use right now today to start making money. So I'm going to actually bring another piece from one of our advanced courses, just one piece for you to learn now. And I just want to include it because I love it so much. So there's just a couple of little extra things we're going to do. We're going to do that right after lunch. I'm also going to show you how to open up an account, and we're going to go on and show you how to place your trades. And then we're going to look at what is another way, now that I've got my money working for me, I've got a stock in an uptrend, undervalued with good fundamentals. I'm going to write covered calls on it, so now I'm making long-term and cash flow. But guess what? Is there another way I can make money? And that's where dividends comes in. Now, I'm just showing you 3. Stacy's going to show you tomorrow 5 ways to make money on the same stock. So, a lot to do. Hopefully we haven't overwhelmed you. We've just started with technicals. We're going to finish that up when we get back from lunch. It is 2:08. We are going to be back at 3 o'clock. So that is 3 o'clock on the East Coast, and hopefully you guys have really enjoyed this. And we'll review this. I know technicals is still, it takes a bit, like overall trend, current trend, but that's what the lines are there for. And remember, if the lines aren't giving us higher highs and higher lows, or lower highs and lower lows, then it's sideways. So you guys I hope you've enjoyed this. I love teaching this, and we will see you back here at 3 o'clock.